Margaret, you're really tuned in to consumer attitudes about spending. I mean, after all, Synchrony is the largest provider of private label credit cards. So if you had to, on a scale of 1 to 10, rate how strong is consumer spending, with 10 being the best, what would you say?
I'd say it's somewhere in the six or seven. Certainly consumers are back in spending. However, with that said, consumers are still cautious, and we can tell by the size of their basket how often they're shopping. So I do think consumers are still being thoughtful about how they spend those extra dollars. We haven't really seen the gas prices that have come down. We haven't really seen that transform into big retail sales. So I think consumers are still being very thoughtful about how they spend their money.
And how about paying their bills? What about delinquencies?
Delinquencies are fantastic right now. They're actually, in our business, it's almost at a historic lows. So, the good news there is I do think what you're seeing as people have some extra dollars from gas, they are putting it towards paying down their bills, which I think is good for the overall economy.
I understand that you listen in on the customer service calls from time to time. I mean, what are you learning about people and their money issues?
I did this during the crisis, actually. I listened to calls every single week, collection calls, because I wanted to get a sense of what was really happening out there. And, I think I started out as a collector back in 1980. And
at Citigroup.
At Citigroup. And it was very shocking when I listened to those calls. It was almost like a flashback. And I told the team we are headed into a tough economy. I think the calls are better now. I think people are working, which is really a big one. And I think we see a real positive trend in people being able to pay their bills.
Now, Synchrony also makes consumer loans. So as interest rates go up, what impact will that have on your business?
We'll adjust rates as they go up, but we don't really anticipate. Our loans are fairly small, so a change in the interest rate is really not that big of a deal for the consumer from an actual payment perspective, because they're small size.
From what we're hearing from economists, it sounds like the Federal Reserve will begin raising interest rates a little later this year. Are you doing anything to prepare for that?
We are, because we haven't raised interest rates in a while. One thing we think is going to happen, it's not going to be just one incremental raise in September, but maybe there might be another one in the first quarter next year. So we have to be ready to handle those changes.
Interest rates right now are near zero. A year from now, what will we be saying? Where's the interest rate level going to be?
I'm not an economist, and I'm not going to even try to say what it's going to be. I do think they're going to be up. I'll say that.
But how much up?
I think it's going to be small increments. I think the Fed is going to take their time to really move rates and see how the economy is moving. So I think it's not going to be a big shock. In a strange way, I actually think rising interest rates tell us the economy is back on track, and it's not a bad thing.